Good afternoon, everyone. How you all doing? Okay, so in my last video, I outlined 8 tips that you can do in order to start your own business, right? So I just want to zero in on certain things, right? Or put certain things in a nutshell. So you have been an individual, you want to start a business, you have a skill, right? You may have expertise, you have knowledge, and you want to start a business. So the first thing some people would have done is not run and do a name search and whatsoever. What they would have done is like put themselves out there. So they would put whatever services they have and what they can do. And most of the times they would start in their inner circle, their family and their friends, cousins and stuff like that, right? And if they have been, say, like they work, like the skill increase, that is what I want to say. When the skill increase now, they get referrals because once you're doing something and you're doing a good job, like people who do construction or tiling or woodworking and hairdressing, barbering, these nail tech, spa, once your skill begins to develop, right, then you get referral. Not your start, you get referrals. And people refer you to you and say, girl, you have a real skill, you could start to charge people for the service that you're offering, right? So the next step to that would have been, you call yourself, you're doing. So once you get the name now, you're taking this name and you are going to incorporate your business. Now there are 3 business types in which you can incorporate, right? Now sole trader. Sole trader is mainly a one-man show, right? Now sole trader, it will own by one person, operate by one person. That's how it usually is. Now some businesses operate as a sole trader, but yet they trade as a name, right? There's a different type of business aspect. So a sole trader is a self-employed individual, like for example, if you're running a lessons class or you're doing hairdressing or you're a barber, you're a woodworker, that sort of thing, who owns and operates their own business, right? So you are the only person behind the business. They are responsible for all aspects of the business, meaning that you are the janitor, you do the billing, you do the work, everything is you, right? Including finances, marketing, and administration. So just as what I said, right? You are the person behind the business. You the sole individual, you are the person behind the business, right? As a sole trader, the individual is personally liable for any debts or legal issues related to the business. So yes, if something is wrong, right, people could sue you, the person, because you are the person behind the business, right? Regardless of if you have a business name and you incorporate as a sole trader, as an individual, you are the person who they could fight because you are the owner of the business, right? It's you. You and the business is the same person. That's same thing. If you take out a loan, you the person, they could come for your personal assets. Meaning, they will ask you for certain things that they will hold as collateral as a sole trader. So if you have a car, a house, you have a piece of land somewhere, they can come for that and take that as payment for the loan. Right? So you're not separated from your personal assets that you own. Everything that you own has to be, or either one or 2 things that you own has to make up for the money that you are going to business income and expenses, right, on a personal income tax return and pay income tax at the individual rate. So yes, you have to pay quarterly health surcharge plus quarterly tax, right, plus business levy, right? So you have to pay those things quarterly. You are liable to pay those things quarterly because at the end of the year, you will have to, when the financial year ends and the tax period comes about, you have to submit your tax return with your income, and you're showing your income and expenses, right? And of course, the personal allowance for 2023 in Trinidad is $90,000, right? So that would have been deducted, and of course, they will work out the tax to suit, right? So that is if you decide to be a sole trader, right? If you are deciding to go and do a partnership business, that's you and either 2 other people or you and somebody else want to go into business together, it is called a partnership. A partnership business is a type of business structure in which two or more individuals share ownership, control, and the profits of the business, right? So if it is that you decide that you want to go into partnership, you have to draw up a partnership agreement in which you will state in that agreement what each partner will be doing, what each partner is liable for, right? And how the profits are being split up. So partnerships are commonly used for small and medium-sized businesses, professional practices, and service-based businesses. I have seen partnership in either somebody who wants to open a restaurant, legal firms do it, accounting firms do it as well, right? There are several types of partnership, including general partnerships. So what is a general partnership? Where all the partners are equally responsible for the business liability. So all that is if the general partnership, right? Each one of the partners is liable for any debts that the business will have, right? The other one is limited partnership, where there are both general partners and limited partners. So, you'll have like four different people who are partners, but two is general. Two will be liable for everything, and two will be limited for everything, right? And then there are limited liability partners, where all partners have limited liability protection. And in order to have that limited liability protection, you have to have some kind of collateral, right? But all the partners will be limited in the liability or the debts or the responsibility of the business, right? Partnerships are governed by partnerships agreement. Same thing, what I was saying before, you have to draw up an agreement. Somebody cutting grass in the back, which outline terms and conditions of the partnership, including the profit distribution, right? How the profits are to be shared amongst the partners. If it's four people, it'll be 20 out of 100. It will be a quarter each, right? If it's three, is one third each, or 33.3%, right? One will be 33.4, and the rest will be 33.3, right? Management responsibilities, like, okay, so one will be charge of operations, one will be charge of administration, the other one will be charge of financial, things like that. Or, if it is general liability, then everybody will be responsible for different aspects, right? Decision making processes, right? Who makes decisions, all right? If it don't have a majority vote on a certain issue, right? And dispute resolution mechanism. So you could decide if there's a conflict to arise, what you all of you have to agree how it is going to be done, right? So that is the partnership aspect if you choose to be a partner. It's not just, all right, so normally when you go into a business with somebody, that is the least likely thing you would consider. But if you are really going to draft up or you are really going to register a business, these are things that you have to consider. You know why? Because legally, if you go to a lawyer, you can't say X, you can't say Y, because there's no agreement to support what you are saying. So that's why it is very important to draft up a legal document or have a partnership agreement, all right? So if you don't decide that you don't want your personal assets to be taken, or you don't want your personal assets to be touched, you can choose to be a limited liability company. Right? It is a legally recognized business structure in which owners have limited personal liability for the company's debts and obligations. So you are separated from the business. In a sole trader and in a partnership to a limited extent, your personal assets could come forth. So if somebody sues a partnership, even though it is under a partnership name, the structure of the business based on the agreement, everybody has to pool together. But in a limited liability, right, the company will be responsible for the debts and the obligations of the business, right? This means that the owner's personal assets cannot be used to pay the debts or lawsuits of a company. So if a company takes out a loan, your personal assets as the individual or all the individuals that comes together, the two or the three directors or the four directors, your personal accounts cannot be targeted, only the business account, all right? If anybody is to sue, they will sue the business, not you personally. So you are separated from the business and your liability is apart from the business, right? A limited liability company can be managed by its owners or by a designated manager. So you can hire somebody to run your business. You don't necessarily have to be in the business to run the business. You just have to be around to have a meeting to assess what is going on, but you can hire someone to run your business, right? And the profits and losses are passed through to the owner's personal tax returns, right? I know in limited liability companies, if you are a director working in the business, you can take out a director's fee, right? Instead of paying yourself as an employee, you take out something called a director's fee, and that has to be shown in the expenses part of your profit and loss account, right? Which is used to do your personal tax returns, right? Once you're under, well, whether you under the personal allowance or over the personal allowance, I would suggest please do your tax return, all right? Please submit it. Limited liability companies are commonly used by small businesses, startups, and entrepreneurs as they offer more flexibility than other types of business structures. And so true. So true. Because, all right, so in terms of getting loans, in terms of the exposure, limited liability companies, they get more. Their what you call it, the overdraft facility is more. Everything is more. They would least likely consider a partnership unless that partnership is like 10 years plus and they're doing very well, right? So they would have traced over the years how they have been doing, right? And the sole trader, they wouldn't want to give you anything unless you have assets. So you have to have assets in order for you to get more loan, right? Or be considered for refinancing of a loan or more loan, right? So in these are the companies that you could consider when you choose to open your business, right? In the next video, I will speak about like choosing a location and hiring employees. So peace out until the next one.